right? As you guys start trading a little bit longer, and you guys, get used to being in the markets more, you will realize the times of the year, right? When you get a whole 12 months under your belt, you will see the difference between, let's say, a January or a July, right? You'll see the difference between a December or an August. And then you can start to formulate. That was a tough thing for me. When I first started trading, I heard somebody say, well, I don't trade during this time or I don't trade during that time. And I never understood that because I came in at the time that they didn't trade. So I was like, well, shoot, the market's moving. Obviously, like, I don't know why you're not trading. The market's still moving. But I wasn't understanding what they really meant by that, right? Yeah, you'll get 20 pips, 10 pips, 15 pips for sure. But those breakout moves that we like to see, those 100 pip, 200 pip moves that we like to catch on a weekly basis, we won't get a lot of that during certain times of the year. So that's just one thing that, I wanted to use December for, was just like a visual learning curve, a visual learning tool to see the market legit has slowed down during this time of the year. And it's totally fine. Gives us time to prepare and get ready for next year. So with that being said, what we are going to do, what I feel like, I was talking with the team, and Tanya, Glenda and Glow and Tanya. Yeah, same names. I don't know why I just said that like that. We came up with some ideas. We came up with some training ideas. And so for this week, we are going to be in Pattern Bootcamp, right? We've got Pattern Bootcamp. It's going to be day one of Pattern Bootcamp. Everybody write Pattern Bootcamp in the chats for me, please. Everybody drop that in there. Pattern Bootcamp. We got Bootcamp this week. Yes, sir. Yes, sir. If you did not know, wake up, get your coffee, get your water, because you may not have a chance to get it again. Once we step into this bootcamp, we are not stepping out until we finish the goal and what we are set out to do. And that is to be able to successfully identify patterns in the market, right? To successfully identify highs and lows in the markets, right? And to be able to identify the pattern when patterns change, the reversals, the micro reversals, and things like that. So guys, I'm super excited for this week, for the training and everything that we're going to get into. I hope everybody has been, diving into their pattern books. I hope everybody has the big book of patterns. If not, we have that for you guys in the Forex tips. And also I want to say it's under books and videos too. So please check all of that out. There's massive resources in there for you guys. So let me get to my chart. So yeah, we're going to talk about, let's see, some pattern. Let me get my screen. There we go. All right, let me look at what it is we're doing. All right. Everybody make sure we are keeping Glenda in our thoughts. Our mom is doing some better. We'll want to, keep her in our thoughts so she stays doing better. So send some love to Glenda whenever you guys get a chance. Send some love Glenda's way. Dun, dun, dun. All right. Cool. Let's get it started. You guys can see my screen, yes? Drop some threes in the chat if we can see my screen. Drop some threes in the chat if you can see my screen. Cool. Cool beans, guys. Cool beans. Alrighty, man. What's going on, guys? So we are going to be in day one, right, of Pattern Boot Camp. So shout out to Glow for writing this wonderful, beautiful itinerary of what it's gonna look like. You're 3 days in hell with me. No, I'm kidding, guys. I'm kidding. It's gonna be super fun. Don't even worry about it. It's not gonna be your typical boot camp that we think about, right? Market boot camp is really important because it helps you to identify market structure. All right, everybody, please type market structure in the chat. Right, I think a lot of the times what happens is when you start getting deeper and more developed into your trading, right? You get your strategies, right? You get into your little niche and you start understanding how to identify, right, certain patterns and things like that. A lot of times what we do forget to do is just look at basic market structure. A lot of, for me, right? I'll speak for myself for a second. I always thought I had to be using the most complicated terms or use the most complicated way to identify a high or low, right? I felt like doing more or doing it the more complicated way made me a better trader and things like that, right? When really, right, it's so easy when you just keep it simple, right? So much easier when you just keep it simple. Exactly. All it did was confuse me. I would hear, liquidity zones and this and this and that, and what? Well, homie, I don't even know what a candlestick is, right? So I realize even the further you get into your trading, the more you should be looking back at the basics, right? The more you should be looking back at the basics. It's like, I don't know, maybe skateboarders when they're doing tricks, they get, they start doing the easy tricks, the ollies, the pop shove its and all that stuff. But then 3-4 years later, they're doing all these kick flips and all these crazy stuff. They may forget that the basics are what got them to there. You know what I'm saying? So it's always good to touch back on the basics. Yes, it's always good to also, get to a place where the verbiage that you are using is something you're comfortable with. Three or four different educators will call this same area 3 or 4 different things, right? Because it's all based on their trading style. All I will always say is just keep it simple, right? Whatever is the easiest way for you to understand or identify, just do that. Don't do what everybody else is doing if it's confusing you. It's okay to go against the grain, right? So what we're going to do day one is just back to the basics, right? We are going to identify highs and lows, right? We're going to identify higher highs, higher lows. We're going to identify lower highs and lower lows, right? We're going to be looking over all of this information today, just because I feel like it's important when talking about patterns. You have to understand market structure, because the way that the market goes into the pattern is the way that the market will come out of the pattern. But you have to understand, again, market structure to be able to identify that, right? So let's get to it. In trading, right, you've got 3 different phases, right, or 3 different trends, right? You've got an uptrend, simple as this, right? You've got a downtrend, simple as that, right? But then you also have another trend, which is a trend, right? Consolidation, right? Or sideways movement, right? These are the 3 phases that you will see in the market. No matter what, you will always see them happen: uptrends, consolidation, and downtrend, right? Now, right before I get too deep into this, I want you guys to understand a couple of things. Market structure is going to look different based on the time frame, right? Market structure is going to look different based on the time frame, right? What do I mean by that? We see here, this is clearly an uptrend with very minimal pullbacks, right? But we're also on the daily time frame now. So if I were to, let's say, come down to the 1 hour time frame and look at, right, that same area, we now see a little bit, more clear the dips that did happen in the market, right? We can see those pullbacks happen, right? So what I want you guys to notice is on the lower time frames, right? Your pullbacks will look deeper than the higher time frames. But as long as it's not breaking structure, right? As long as it's not breaking structure, and we're going to talk about that right now, then you're good to go. So breaking structure, what do we mean by that? All right, what do we mean by that? When we're coming into a market and we are wanting to, let me go to a 4 hour time frame so I can see a little bit. All right, I'll start here. When we come to a point in the market that we are able to identify, we would call this the low. Do a call out. All right, this is the low of the market. All right, this is the low of the market. Now, we know that price is trending up. So when you are in an uptrend, the market structure that you are looking for is going to be higher highs and higher lows, right? In an uptrend, we are looking for higher highs and higher lows. Everybody got that? What type of market structure are we looking for in an uptrend? What type of market structure are we looking for in an uptrend? Perfect. Higher highs and higher lows. Absolutely. Absolutely. So easy way to do that, right, is to just start by identifying, right, your trend. And this is just in back testing purposes, right? We're not, typically when you're looking for market structure, you want to be back testing market structure. So that way you know what's going to be happening in the future. You can, of course, you can identify market structure while it's happening. But for the purpose of what we're doing, just learning, back testing is always going to be the best way to go, guys. It's always going to be the easiest on the eyes because you're not stressing about getting in the trade, right? You're looking at past movement so that way you can determine what would happen in the future. So that being said, we can clearly identify that we are in what type of market here? Is this bullish or bearish? Right, we're in a bullish market. All right, we have 1 point, 2 point where a trend meets. That's all you need for a trend line. And we see that price is going up. So we know that we're in a bullish market. Now, I have identified the low of the market. Right, I have identified the low of the market. Now, the next thing you want to do, right, is see where the highs are. Right, now ask yourself, when we're looking at structure, when we know we're at the low, right? When we're talking about identifying the highs, we're looking to the right. Right now, this is us moving to the right. And you're just simply looking for where did price break out higher than the previous structure of the market. Right? Simple as that. And what you're also using as what I would say like your original marker is the first point that you identify. In this case, it is going to be this consolidation right here on this trend line. Right. The reason why you need to have a starting point is because you have to determine where is the market higher or where is the market lower. Right. Because in this case, yeah, this is a low, right? But technically, it's also a higher low. right? Because we still see that price is trending bullish, but that's neither here nor there. This is where we are now in the market. So we have our low, right? And we just follow. I honestly, when I was learning how to trade and identify market structure, I would just move my cursor to the right, just like this, right? And whenever I would see a point that was higher than where the previous market was, I would then ask myself, is this a high in the market, right? Or is this a low in the market? Based on where we started, we see price trending. This would be our new high, right? And what we mean by that, it's literally just, I don't want you guys to overthink it. It doesn't have to be the highest point in the market or higher than, right? It just has to be higher than where you started. That was the other thing about identifying highs and lows in the market. I thought it had to be the highest or the lowest point. I thought I was looking for swing highs and swing lows every time. That's not necessarily the truth, right? In between those swing highs and swing lows are more highs and more lows, right? So in this case, as we're looking, right, we see prices trending to the right. We get a high in the market here. So I just take my pen, my little marker, right? And just mark it. All right, this would be a high. Now, if this is my high, right, and this is a low of the market, what would, if I came here, this point in the market be? What would this be considered? There we go, Drew. There we go. There we go, Erica, Renee, right? It would be a higher low, right? Do we know why it would be a higher low? What market do we get higher lows in? What type of trending market? All right, there we go. An uptrend. Right? When you get higher lows, that means the market is trending up. It is losing, right? It's downward momentum. And it's becoming higher than each point in the market. So that's how you can identify, right, your uptrends. So if this is my higher low, right? If I'm looking here, what would this be considered? Right? Higher high. Now, do we know why it's called a higher high? Do we know why it's called a higher high? Let's see, who knows? Tell me, who knows why? There we go. Higher than the previous high, right? That's it. Keeps going higher, right? There we go. Higher than the previous. Exactly. Simple as that, right? When you are in a ranging market, right? A bullish ranging market, and you have a low, you've identified your low, and you get a higher, you have a high, right? You have your higher low, you got a higher high. This is still considered a higher low, right? Even though it is lower, right? And it's really not even lower than the previous one. So it doesn't matter. So even, right, if you had a point where it gave you a double bottom, right? That double bottom, I want you guys to understand, is still considered a higher low because it's higher than the previous low. Even if it were to come to a double bottom, right? Understand we are using the previous, right, market structure. All right, so whenever you guys are using the trap and you'll hear a video, you see a video and we say previous market structure, understand that it does not always have to be the one immediately to the left of it, right? Previous is anything before that, right? Anytime before that. So that's why it is always, always important to look left when talking about market structure, because if price has broken one level, but is not broken a previous level, then you're still good to go, right? In that trend. Right, you're still good to go in that trend. So as we continue to mark, I've got my higher low. what would this be considered, guys? All right, higher high. There we go. All right, higher high. Whoops. All right, that's our higher high. This could also be considered your higher low too, right? Now, for anybody who ever gets confused as to, okay, well, would this be my higher low and this be the higher high, right? Again, remember what I'm telling you. And this is the way I've learned it because it used to confuse me. It really used to confuse me. As long as price has not broken the previous higher low, right? Any of the previous, you're still good to go. So what do I mean by that? So yes, this is our higher low, higher high. This technically is a higher low. Technically, it is a higher low. It is higher than the previous low, right? Meaning this would be the next higher high. And this here would be a higher low. Now, this is the better example. It is just about even, if not came a little bit lower than the previous. But when you get a little deeper into, right, identifying market structure, do you see the wick rejection? Right? Do we see the wick rejection and where the candle actually closed? Right? Now, when we're talking about market structure, higher highs and higher lows, this is where the close of the candles becomes very, very important. Right? No longer do you worry about the wick, right? The wick isn't going to tell you, it is going to tell you something. But when it comes to identifying market structure, the open and close of candles is more important than anything, right? More important than anything. Yes, in a sense, yes. The wick for structure means little. But as for price action, we know that the wick is important, right? But when it comes to structure, the wick does not mean as much. All right, just for pure structure, the wick is not what we're looking for. We do know that they tell us stories, right? But that's not the story that we're looking for in this book, or this chapter, I should say. All right, so we've got higher low, higher high, higher low, all right, higher high. All right, and so on and so forth. Does this make sense? Drop some threes if this makes sense so far. Drop some threes if this makes sense so far. Are we confused anywhere? Are there any questions? Are there any questions on market structure? How to identify higher highs and higher lows? No, we're good. We're good here. Cool, cool. So if I tell you I'm seeing higher highs and higher lows on this chart, what type of trend am I looking at? If all I tell you is I see some higher highs and I see some higher lows, what type of trend am I looking at? Perfect. If in that bullish trend, I tell you, looks like price has just created a higher high, anticipate what next? If I tell you it looks like price has just created a higher high, what are we waiting for next? What are we anticipating? There we go, a higher low. Now, what would that be called? If we are looking for the higher low, what would that be called in the market that we are in? what would that be considered? Hey, okay. Okay, there we go. Now, right? Now, knowing what we know, do you guys think you'll be a little bit more comfortable if you were to come to this chart, right? Knowing what the overall market is. Now, would it be easy? Is it easier to identify pullbacks now? Is it becoming a little bit easier to see them and to truly know, like, yo, I don't care how hard the market dips. I don't care how hard the market falls. It could fall 300 pips, totally fine. I know I'm going to get 500 pips because we're in a bullish market. I'm going to wait for that move. I'm going to wait for that move because 9 times out of 10, whenever you wait for the dip, you will double up. You will always double up. That's just how it works. That's just how it works. Yes, never had it taught like this. Wow. Wow. Okay. Shout out to Glow. Glow knew exactly what you guys needed. Honestly, shout out to Glow and Glenda. They knew exactly what you guys needed. Perfect. So let's do this as well. We just did all of this on a 4-hour time frame. Let me go down to the 1-hour time frame. All right. Let's go down to the 1-hour time frame because I want to show you guys something. You know what? I want to go a little bit lower. Don't mind the noise, guys. What I mean by that is I am going to be zoomed out, but we're only looking at structure. We don't care about price action in this moment, right? In this moment, we are only worried about what structure looks like. Oh, they don't want to let me be great, huh? Hold on. Let me give it some time to load that data. I'm making my computer work today. All right. What I'm just trying to show you guys is that regardless of your time frame, right? Market structure is market structure. Yeah, they're not going to let me be great. I don't know if they're going to let me go that far back on the lower time frame, but that is okay. I got the 1-hour time frame. You can draw a parallel channel if it won't look. Oh, you're absolutely right. I definitely can, huh? Here we go. It'll load on the 1-hour time frame. Right. So 1-hour time frame after marking up structure on the 4-hour time frame. All I'm trying to get you guys to see, it follows the same structure. There's just more noise. What I mean by that is more candlesticks. That's why I like to tell you guys to look at the higher time frames, because the higher time frame will be more defined, right? And the lower time frame will be more wavy, I would say. Yeah, exactly. Like Glenda said, waves, right? Because structure happens in waves. Let me see. I have a specific picture I think I've sent to you. I'll get it sent again because I really want you guys to understand. Oh, that's what it was. It's the same thing as this. Right? When we're looking at multiple time frames analysis, right? Price moves in waves. So what may be a clean 1, 2, 3, 4, 5 on a 4-hour time frame, maybe 1 to 7 on the first leg, or 1 to 7 on the second leg, and a 1 to 7. You understand what I'm saying, right? It has to happen that way. When we think about this is 1 4-hour candle. This is 4 1-hour candles. So while this 1 4-hour candle was up, the 4 1-hour candles, one went up, one went down, One went up, one went down, then one came back up. But ultimately, it gave you the same trend. But on a lower time frame, man, it went up, dipped, went up, came big dip, right? But it ultimately is giving you the same structure. It's giving you the same structure. It's just understanding that the market moves. What's the word that I'm looking for? There's a specific word that I'm looking for. I'll think about when it comes to me. I'll let you know. There we go. Thank you, Renee. Yes, the market moves in fractals, right? It moves in fractals. Thank you. That's exactly the word I was looking for. It was just stuck back there somewhere, right? So do we understand, or do we understand how to break down, right, market structure? Do we understand that the 4 hour, right, is going to create the swing low and the swing high? My 1 hour, my 15-minute is going to give me my higher highs and my higher lows. All right. Overall, all you have to do is identify the way that the market is moving. Are you bullish? Are you bearish? Once you identify that, then you can break down and identify where are your higher highs and where are your higher lows? Where are your lower lows and where are your lower highs? All right. Yeah, Delvon, I do remember. I was in there. Delvon touched on that last week. I remember hearing that. And that's why this boot camp coincides exactly with what they're doing in study hall. All right. What about the daily and the weekly time frame? What about it? What about it? Like, where does it fall into play? The daily and the weekly, for those who are to the untrained eye, it's going to be a lot harder to identify the higher highs and the higher lows, because on a daily and a monthly, I mean, like on a monthly and a weekly, you don't necessarily have many dips that are happening in that market, unless you're looking back like a 6-month span. All right, let me show you what I mean. All right, they're still there, right? This is the original low. This is a high. It's a higher low, higher high, higher low. So like they're still there, but they're just not as clean or easy to identify, right? I guess it's easier to identify, but what may be confusing to some is in these areas right here, right? Where market is consolidating. All right, instead of it just being this one point, it becomes this whole zone is the higher high. All right. You're just not looking in one specific area, but it's the same thing. Same thing, less noise. This is a low. This is the high. This is my low. This is the high. Low, high, low. So it's the same thing. Right. So depending on the type of trader that you are, if you are a scalper, you are going to want to identify market structure anywhere between the 1 and the 15-minute time frame. Right? If you are a day trader, intraday trader, right? You are going to want to find the highs and low market structure on, I'd say, like your 4-hour time frame and your daily time frames. Right? Swing traders, position traders, you guys are using the weekly and the monthly swing highs and swing lows. All right. And I'm talking low, high, low, high, like way bigger than just this channel. So, all right. And so like Glow's explaining in here, right? So if you wanted to find market structure on the higher time frame, all you had to do was where you identified your low, do the same thing. Put a box, put an ellipse or whatever, and then go down to that lower time frame that you were trying to identify. Find the box from where you started, Now you know this was the weekly low. Now you can begin to identify market structure for the week. Does that make sense? Did that answer your question? Let me see, Garland. Was that Garland that had that question? Yeah, it was Garland that had that question. Perfect, perfect, perfect. All righty. Now, cool, the market has hit its high. The market gave us a whole bunch of pips, but man, the market kind of slowed down. All right, the market kind of slowed down, kind of started moving a little wobbly. I want to tell you guys a reversal pattern that you can identify, that you know the market is about to reverse. Does anybody know what the pattern may be? You probably don't. Right? You probably don't. This is going to be the first pattern that we're going to be going over, really. Even before the M. The M is one of the patterns, though. Let's see. Who got it? Who got it? There we go. Star formations. That's really what I'm looking for, right? So it's even before the double and the triple top, even before BART, even before the head and shoulders. This was the pattern, all I needed to see right here. This right here was all we needed to know. Right? This right here. Why? What is that? What is that, guys? No, no. We know it's a reversal, but what is that? What candle is presenting itself? Right? A bearish engulfing candle, which is also an order block. But it did one more thing. It created a pattern. It created that pattern right there. What letter is that? Thank you. What letter is this, guys? That is Janelle. This is February 24th of 2021 on a daily time frame. February 24th, 2021 on a daily time frame. Our starting point was September 24th of 2020. September 24th of 2020 is where I started, if you're going to backtest that, right? Exactly. So this is an A. This is an A. There are 3 market reversal patterns: A's, V's, and W. Well, 4. A, V's, W's, and M's. What are the 4 reversal patterns in the market? What are the 4 reversal patterns in the market? A, V, W, M. Thank you. Thank you. A, V, W, M. Thank you. Right? This is all we are looking for when the market reverses. That's it. Nothing else. When I'm looking for a reversal pattern, I am looking for A's. I am looking for V's. I am looking for W's. And I am looking for M's. If I do not see that pattern, the market is not ready for a reversal. Right? So we have identified our market structure. Price made its push. right? Price reached a high in the market. We then were given a bearish order block. Now, one, that is your first sign, the bearish order block. Two, the A that it created in the market is your second sign, right? Your second sign. Now, what happens when you get to these points, identifying the reversals? I only trade order blocks. Only trade the order block, right? I'm going to show you real quick because this isn't like an order block training. It's like pattern training, but I'm going to show you how to trade it. Right? Exactly. Exactly. I'm taking my Fibonacci retracement, right? I'm going to mark out the high and the low of the candle that is being blocked. The candle that has been engulfed, I am marking from the high to the low, all the way across. Right? All the way across. Now, anywhere in this zone, is it safe to enter for me? Why? This bearish candle here closed below and confirmed that price did not want to stay at these levels. This was all the reversal we needed to see, was this A in the market. That was it. I promise. That was it. That was all you needed, was this A in the market. Anything else was just price coming back for these orders. Right? And that leads us to the second, right, trend that happens is consolidation. Right? Is consolidation. And consolidation is, all it is sideways movement. It is the consolidating of orders. The market does not know which way it wants to go. It does not know, has not decided. One way to trade consolidation is if you missed, right, the reversal. What I like to do is I put a box. Let me what I consider this an inverted cup and handle. You probably could. I probably wouldn't. In here, yeah, maybe. You could. I kind of look at it like this, right? This is another pattern that I kind of made. It's called a launch pad. I only trade consolidations using the launch pad, right? It's the easiest way to trade consolidation. The easiest way. What I'm doing is when price consolidates, there is going to be a support and resistance. There is a baseline, a zone of where it doesn't want to break out, right? What you're doing is you are wanting to look where majority of the orders meet, right? Which is right in this zone for the top. And I would say this would be the bottom of our consolidation here. All right, we see the majority of the orders are respecting this zone here, and majority of the orders are respecting this zone here. Legit, just box it out, right? Just box it out. Now, I ask myself a couple of things when I'm looking in consolidation. All right. What is the market structure of the consolidation? I know that sounds crazy because it's just consolidating. There wouldn't be structure. I'm gonna go down to a lower time frame too, so I can show you guys. All right. So So yes, Lala, price is giving us equal highs and equal lows in consolidation to the beginner, to somebody who doesn't have shams training. That's all it's giving you. But what's also happening in the consolidation zone is price is already telling you where it wants to go, even before it breaks out. Even before it breaks out. Right? And why and how is it doing that? Not even just the wicks. This is what in the market, guys? What is this? What would we consider this? No, not the I'm sorry. Is it high or low? Is it a high or is it a low? All right, we're at a high. Simply that. Is it high or is it low? This area right here. I'm gonna freak you guys out real quick. I'm telling you, watch. You might miss it. Don't blink. Don't blink. Do not blink. It's a lot easier than what you think. High, right? What is this? If this is a high, what is this? I'll make it easier for you. Sorry, excuse me. Right? Let me not skip a step. We get a high, and then what do you get after a high? You get a what? You get a low, right? You get a low. After, right, the low in a downtrending market comes what? Right? In a downtrending market, after a low comes a lower high. What is this? Remember, I told you guys, don't worry if they meet at the same point. Don't worry, right? It's still showing you structure. So if this is a high, this is a low. We've got a lower high already presented itself. What do you anticipate after a lower high? In a bearish market, what are we anticipating after a lower high? Does the market not give us that lower low? Right? So the reason why I didn't want to touch on what you said is because you actually spotted out everything that I was trying to show you guys. Just like in the past before, whoops, not that one. The high we got to the left, what pattern did it create? What confirmation, what confluence did this give us on top of it just being a high? What did this present? What candlestick pattern is that right there? Right? Formed an A, and it gave you an order block. You guys understanding what I'm showing you now? So what two things have been present every time in the market reversal? What pattern? The A, and what candlestick? An engulfing candlestick. Right? So for your notes, a bearish reversal pattern is an A. A bearish confirmation candle is a bearish engulfing candle. Right? Those are the two things that you need to identify the reversal. That it's not, I'm telling you guys, we're going to make it super simple. All you had to do, just like we did to the left, was identify the A and identify the bearish engulfing candle. We had the same thing happen over here. We got an A and a bearish engulfing candle. So again, I tell you, yes, it looks to the naked eye like normal consolidation, but to now us, our trained traders, we know that price is already showing us the reversal pattern before it happened. Does that make sense, guys? You guys understanding that? How we saw that? How we legit identified it before it happens? Right? It already happened. The reversal already happened, even within consolidation. Even within consolidation, reversals already happened. Right? Here's the one other thing that I can tell you about how to identify that. Where were we on the daily? Right? Let's say we were identifying this on the daily. There's a whole other way to trade it. And we marked out, right, our zones. We knew where support and resistance are, right? Just like I tell you guys, you can put a Fibonacci on an engulfing candle or anything. You can put a Fibonacci on the support and resistance of your consolidation zone, right? From the high to the low, right? Now, all you are waiting for is a candle to break and close on either side, right? For a candle to break and close on either side. Because now we are trained to see this reversal before it happened. You see this engulfing candle in here, right? We would have lost it thinking, oh, this is a fake out, right? Oh, it's just a fake out. Yes, it is a fake out, but it's also the indicator for the reversal, right? Once this candle closed and broke below our consolidation, we enter the market when price retests. When price retraces, this would be our entry for the sell. You treat it just like an order block. You would treat that consolidation just like an order block. And honestly, it's just the original trap. It's just trap 1.0. You wait for price to break and close to in a direction. You wait for the pullback. You enter said market in that direction. Did that make sense? That was like super quick, really easy, nothing confusing. Just when in doubt, fib it out. The market will at least always have to give you 50%, no matter what. All right, that makes sense. We cool there. We now know how to identify reversals. Yes, do we feel a little bit better? What pattern are you looking for a bearish reversal? I'd say two patterns. What two patterns are you looking for with a bearish reversal? All right, A or M. There we go. A or M and the bullish engulfing. So three. I'd say three. Two in a confluence. All right. Cool. Now, honestly, because you've already identified the high, this part just gets easier. You guys see how you can really like manipulate the market to work for you in your favor? Even though price may be consolidating, we already know where the high of this market is. So even if this was the high that we use, even if that was the only high, we've got a high, we've got a low. What is this here? What would this be? If this is my high and this is my low, this is what in my market structure? Right? Lower, high. Lower, low. Lower, high. Lower, low. Right? Lower, high. Lower, low. technically lower high. Lower low. Lower high. What are we anticipating this market to give us? What would be the next anticipation for this market to give us? All right, lower low, another lower low. And what has our sentiment been on GU? What have we been looking for on GU? Have we been bullish or bearish? We've been, right? Right? Is this making sense? Are we starting to understand things a little bit more? All right, we're starting to understand a little bit more. All right, so this is how you can successfully counter trend trade as well. Yes, because I couldn't understand why we kept trading GU. It makes super sense. So even, look, I'm gonna tell you, right? In all honesty, even if we held GU, this GU trade that we entered right here, the market went up and came right back down. Now you guys see why I don't really care to like tell you, yo, hold the trade. Hold the trade. Right? It's not that, like, trust me, guys, I understand risk. Like, I understand, oh, I'm in drawdown. But I also understand what happens with patience. And when you know where the market is already going to go, you don't really lose. The only thing that you're losing is comfort and like mental stability. That's the only thing that you're really losing. You know what I mean? You're only losing money if you have a stop loss. You're only losing money if you close that trade being impatient. Right? But it also comes with understanding structure. So yes, this is exactly why I have been nothing but stupid bearish on GU, because for the last month, almost 2 months, GU has been creating lower highs and lower lows. And in what market trend do we get lower highs and lower lows? What trending market? All right, downtrend. Downtrend. Look at every pullback. Every pullback came to previous structure, right? Every pullback came to previous structure. Every pullback came to previous structure. Every pullback came to previous structure. This was previous structure. Did the market ever come back above and break this trend right here? Ever. Did the market ever come back above and break back above this line here? Yo, the market could come straight back up here and still be in a downtrend. And still be in a downtrend. Right? This is how you can identify that. This is how you get a better idea of what is the true trend of the market. Right? Because pullbacks happen all the time. Pullbacks happen all the time. It's just a matter of, do you know where you are positioned within the pullback? Hey, what's good, Jaron? How you doing, bro? Right? Do you know where you are positioned within the market structure? So like when I'm asking you guys, where are you in the market cycle? This is the kind of question that I'm asking. I'm currently looking at a higher low, and you know what I'm saying, in a bullish market. Oh, I'm currently waiting for the lower low to be created and for the pullback for me to enter for a sell. This is the kind of verbiage and terminology that you'll hear when you start getting developed in your craft. You will be talking, you'll sound like you're talking in code, right? Just got a lower high, anticipating a new lower low, look for shorts on GU. All I said, right? Hey, that man, I felt smart saying that, right? All I said was, hey, we're in a bearish market. Price just pulled back. Look to sell. That's it. But if I say it like that, you'll be like, whoa, what? As opposed to the market just created a lower high. I'm anticipating a lower low. look for shorts on GU. Now, when you hear something like that, you will have way more information, right? And an understanding to know what you are looking at when you hear that. Right? So this is exactly how you use market structure to enter and exit trades. You identify where your lows are. You identify where your highs are. You look for M's, you look for V's, you look for A's, and you look for W's, right? You look for bullish engulfing or bearish engulfing candlesticks. When in doubt, fib it out, right? I gave you guys a lot today. I gave you guys a launch pad, right? You also know how to trade the launch pad now, right? And I'm going to be honest with you. This is why we're doing this boot camp, because I know you guys also see the larger pattern that I taught you guys. And that was what Pat was talking about. Who's at the party today? Who came to the cookout, Pat? Right? We got on at the cookout. But before I can teach you to identify Uncle Jim, I need you to identify the first reversal, the A, right? I need you to identify the failed breakout and the consolidation to understand that both of those together create Uncle Jim. Make sense now? Uncle Jim isn't just one pattern. Uncle Jim is the combination of patterns. That's what gives him the brain, because it's more than one. That's why that's what became the person, was the two patterns together. It birthed the brain, right? Kind of gives you like that. That's just how it worked in my head. When I saw him, and when I was looking at them, I said, oh, well, this creates a head, like a legit head, like ears. Oh, so these are the brains of the reversal. The A's, the V's, the M's, and the W's are the brain of any reversal pattern. So I just named them and called him Uncle Jim. That was it. That was it. Right? It's not like a specific pattern or a pattern itself. It is patterns. Uncle Jim is the pattern. Like, if that makes sense. Does that make sense? Uncle Jim don't make sense. So I understand if it doesn't. He doesn't make sense. So I understand if it's a little confusing. But that's why this boot camp is here, because I'm really going to break down to you guys now how I started seeing these patterns, why we call him Batman, why we call him Bart, why we're talking about half Batmans and things like that. Right? Yeah. One other thing real quick. The one thing that is also always present, is support and resistance, right? Support and resistance is present 24/7 in the market. It's not going anywhere. It will never disappear. Support and resistance is everywhere. It's everywhere, right? That is one thing that stays constant in the market, is support and resistance, no matter what. With your channels, they just become sideways trend lines. That's it. That's all it is. Hold on, let me put that right there. All right. That's all it is, guys. It's just sideways trend lines. Don't ever forget that. Don't confuse yourself. When you're looking for support and resistance of the trend, it's your trend lines. That's why I tell you guys, always mark up the trend, because you're not just drawing the line to see which way price is going. You're giving yourself a support. You're giving yourself a resistance to see that the market legit moves in nothing but channels 24/7. 24/7, 365. That's it. That's all it does. All right. How we feeling today, guys? How we feeling today? How was day one? That was day one. That was day one. Did we learn something new? Did we get some clarity? Did we feel a little, we know now how to attack these higher highs and higher lows, right? We know now that if I'm identifying structure on a higher time frame, when I go to my lower time frame, I may just see a little bit more noise, right? But it does not change the direction of the market, right? It does not change what you're looking at. It just changes how long you have to look at it. That's it. Don't think of the time frames as, like timing the market, but the market timing itself. The market is timing itself. So as opposed to, we don't want to time it. We let the market time it and we react to it. That's it. That's it. Needed this, have to remember to draw market structure, not just look for trap zones. Absolutely. Absolutely. And that's why I'm glad that Glow had his break, and Glow and Glenda. Shout out to both Glow and Glenda and Tanya. Tanya's got some stuff, some sauce we're about to unveil this week too. Right here, hold on, let me get you up here, Jern. Yeah, we got some stuff for you guys that is going to be really fun this week. What's up, bro?
Yo, what's going on, y'all?
Man, chilling, man. How you doing?
Man, I'm alive, bro. I can't complain.
There you go.
How y'all doing? So, what Sham just said about instead of looking for a master counter setup all the time, this goes back to what I've been telling y'all in the lab. Support and resistance, trend, and all that stuff will help you find your master candle, right? So, like, what Sham just did today was fire, and I caught the tail end of it. So I know if within the 3 minutes that I heard was fire and straight facts, I know he served y'all over an hour worth of fire and facts. So drop some money bags for my BootCamp. Come on.
Sir. Yes, sir.
Let's go. Let's go. I'm proud of y'all, man. Like, we finna hit 2022 strong. But that's all I had to say. I ain't had too much to say.
Yes, sir. Yeah, guys. 2022, man. It's looking wonderful. And that's why we're going to get equipped with all of the tools right before it happens, right? I'm not just going to throw you to the wolves. We're going to go all the way back to the beginning. That's what this week is for. It's back to the basics, right? Break it down from the very beginning. So that way, when we do go back into 2022, we've got our foundation, right? We have our strategies that we're going to be going on, and we have everything that we need to be successful. So yeah, I'm super excited. The rest of this week looks lit. I'm not going to tell you everything, but it looks real juicy, real juicy. Just know that. Let me see. Are there any questions? I want to say that's it. That's a solid day one. Are there any questions? Yep, on tomorrow, day 2, boot camp tomorrow morning. I'm going to go 7 o'clock, guys, 7 o'clock. Hey, look, that 6:30 alarm my alarm went off at 5:45 today, but the baby was up too. So I was like, I didn't want to have the baby up at 5:45 in the morning. So I'm not going to lie. No, 10 a.m. Eastern Standard Time for you guys. 10 a.m. Eastern Standard Time. Yes, Kiki, what's your question? What's up? What's going on? How do you find risk to reward ratio? That's based on pips. Risk to reward ratio is based on the amount of pips. Simple example, if your stop loss is 10 pips and your take profit is 30 pips, your risk to reward is 3 to 1. But we'll talk about that I'm gonna put that in the boot camp. We'll find a way. Let's find a way to find somewhere to write that in, to where it makes sense, so we could build up to that. But I'll help you get that. We'll get that worked out, Kiki. Yeah, absolutely. Anything else? Yeah, you get 5 hours of sleep, Pat. Yeah, you definitely can. Yeah, 10 a.m. Eastern Standard Time. 10 a.m. Eastern Standard Time tomorrow morning. Yeah, I see you got that coffee. Yeah. Cool. Alrighty, guys. Well, thank you so much for being with me this morning. I always appreciate you guys spending some time with me, man. It's definitely a great way to start my day. Yeah, I love that Black Santa too. Yeah, it's definitely a beautiful way to start my day. You guys give me a lot of good energy. You guys get me happy to start the day, man. So I'm excited to start it with you guys. Now I'm about to go start it with my family. And I'm gonna highlight you guys in the chats. If you guys need anything, please tag me, at me, hit me up. I'm a mention away. All right. I'll see you guys later. Adios.